Hello, I'm Jo Price and welcome to Finextra TV. We're in our virtual studio today and I've got the pleasure of welcoming two guests. First is Miguel Amaro, who is joining us, and Anthony Nonnis. Thank you both for joining us today on Finextra.
Thank you, Jo.
Thank you very much for having me here.
You're welcome. Today we're discussing the acceleration of lending transformations. Anthony, perhaps if I could come to you initially. What is the impact of transformation on financial institutions in the current market?
Yeah, thanks, Jo. Look, as a provider of a commercial banking solution, I think we're seeing financial institutions basically race to modernise their lending operations. The acceleration of lending transformation is no longer an option. It's a necessity to survive in this sort of fast evolving tech data driven market. There's a couple of trends that we're seeing in this space. First of all, I think there's a lot of pressure to deliver lending products faster to market. So in order to do that, I think we're seeing financial institutions embracing cloud-based options, API-driven options in order to integrate with other fintechs within the system to be able to provide that agility, that scale, and that security. We're seeing the need to improve their operational efficiencies and overall a drive to reduce their costs. Again, that's being done through automation and again by embracing AI. The other key one here is there's a lot of low barriers to entry, so a lot more competition in the market. Therefore, customer experience and customer retention is key. So embracing solutions that give you that agility to provide new products faster market, to embrace new technologies such as AI, and to provide the customer that real-time experience of near real-time approvals and the ability to hyper-personalize is really setting companies up to be successful in the current market. Basically, because without transformation, probably there is a big risk that they could become obsolete.
Thanks, Anthony, for that comprehensive answer. Miguel, if we could come to you now, please. Perhaps you could touch on what you think the impact of transformation on financial institutions is in the current market.
I honestly believe that the biggest impact that we will see in the near future will be the adoption of the AI technology in a very extensive way. We are seeing that particular technology being adopted by many banks, from small to large financial institutions, into multiple areas in order to improve the quality of services that they provide to their clients. In order for their clients to obtain what they expect to be obtained, namely hyper-personalized products, easy to access, easy to get an approval, for example, on lending products, etc. So we will see this AI wave coming in more and more on the financial services, and that's also my view, my expectation that will happen strongly in the next upcoming months and years.
Thanks, Miguel. If we stay with you then, the next question is really going back slightly. What does accelerated transformation actually look like, in your opinion?
Well, accelerated transformation, I will see that it will start by more and more seeing the banks adopting composable platforms. So the financial institutions until now, they lived on monolithic solutions, and we will see in the near future the adoption of cloud-based API-driven platforms where they will be able or will enable the capacity for those banks to adopt best-in-class solutions without impacting strongly their existing platforms. That's one. Okay. As I mentioned before, the AI wave will clearly impact many areas and will enable automatic underwriting, for example, or even real-time approvals for specific loans that are requested by their clients, or even fraud detection, etc. Additionally, we will see more and more embedded finance options. Okay, options at the point of sale, which is something that we have seen appear in some specific markets, but we are seeing a spread of these kind of propositions. As I mentioned before, another trend that we will see is real-time data analytics. Okay, so that will enable hyper-personalization and hyper-personalized products to the bank customers. Okay, and so that's another trend. And finally, last but not least, we will see also compliance and risk management being done on a cloud-based solutions. So that's also another trend, with real-time regulatory reporting and even fraud monitoring being done, supported by AI. That's also another trend.
Thanks, Miguel, for your answer. Anthony, would you like to maybe expand on that and perhaps elaborate a little bit more on what you think accelerated transformation actually looks like?
Yes, that's a great question. So accelerated transformation means moving beyond slow incremental updates to agile, cloud-native, composable lending architectures that evolve in real time. Miguel used the term composable, and I think I may have used that myself in the opening sentence. I think what that's really, to help you understand what that means, this allows financial institutions leveraging cloud-based, API-based platforms to integrate best-in-class solutions without needing to overhaul their biggest systems. So I think one of the biggest challenges they're facing is that tech debt. So if they want to kind of evolve and actually address the ever-changing needs of their customers, and we use the term hyper-personalization. What we're talking there, and as Miguel said, using the real-time analytics, but being able to actually tap into an ecosystem to actually leverage AI-driven loan origination, for example, and decisioning, to enable the ability to integrate with cloud-based compliance and risk management. We're able to actually offer that agility and actually allow them to evolve in real time and actually access new customers and actually grow the spend with existing customers.
Thanks, Anthony. Just sticking with that, you mentioned agility there. Could we perhaps touch on how you think financial institutions with reduced capacities can still hold accelerated transformation up as a priority?
Yeah, look, many financial institutions face budget constraints, legacy system limitations, and internal skills shortages. But I suppose the way they can actually address this is, and back to my previous answer, is adopting this composable approach, which means that they don't need to do a large-scale overhaul. They can actually implement what they need in a modular fashion by leveraging SaaS and cloud-based options. By leveraging API solutions, that means they can more easily integrate and actually remove or eliminate some of that heavy IT dependencies, allowing them to scale and to grow. I think also, AI is the buzzword of the current time, but being able to embrace that to drive down both the cost, but also to access that data is going to allow them to better understand the client's needs and actually be able to allow them to offer those hyper-personalized offerings, and more importantly, help them make better decisions and faster decisions, overall focusing back on the key differentiator of the market, which is the customer experience. I think by leveraging and accelerating lending transformation, it's not just about having limited resources, it's about understanding what's the right technology to drive that agility and efficiency, and as always, maintaining that customer centricity.
Thank you. Thanks, Anthony. Miguel, coming to you on this, what advice would you perhaps give to financial institutions with reduced capacity who want to still hold up that accelerated transformation as a priority?
Well, on a SI perspective, I see that one of my advices would be to do an approach that will enable them to hollowing the core, meaning we have seen smaller, medium, or large financial institutions living in the last decades on big core banking platforms. So big boxes full of everything and full of all the capabilities that they need to operate. But to approach modernization and to move in a very adjusted approach to a composable reality, our advice as an SI is to allow the core, replace and take out of the core parts that can be easily or more easily replaced by a SaaS cloud solution. Example, the pricing engine or even the lending engine, etc., and leave on the core the minimum that is needed that will enable them to, in the future, replace more easily the core system itself, or where they have the system of records that contains their clients and their accounts. So this is an approach that we are seeing more and more that is being evaluated by all the financial institutions. All of the core take parts of it, as I mentioned, and then guarantee that they will have the conditions to more easily replace by their existing core by a much more modern core platform.
Thank you both for joining us today on Finextra TV, Miguel and Anthony, and for sharing your thoughts and advice on this topic.
Thank you, Joe.
Thank you very much.